Hey guys, alright, what I'm going to do today, in addition to providing my normal trade breakdown, is also give a quick video kind of describing my logic, my thought process, and how I framed this market maker buy model today entry, so you can see how I approach trading news and navigating my entries before these volatility drivers. Okay, so without any further ado, let's hop right into this chart. Let's try and make this quick today. I don't want to spend too long, so I have some levels pre-annotated, and what I want to draw your attention to first of all is the daily chart. So on the daily chart, I want you to pay attention to this inversion fair value gap and or this natural support level and the previous day candle body closures. So as you can see, the weekly profile here, right, in terms of distribution, is a classic buy week, meaning we have formed the low of the week on Monday and Tuesday, and we have continued to expand towards the buy side liquidity or range high objectives. Now, in order to qualify this, we're going to be using daily candle structure and the daily bias method I've outlined, in addition to lower time frame dynamics and market maker models that we can frame. So as you can see, price on Wednesday refers back to this inversion fair value gap or natural support level in the market, right? Before, let me quickly extend this out, right? Before closing above this previous day high. My apologies, it should be this one. So as you can see, as price closes through this previous day high, we're getting an indication that price has rebalanced this area and is displaced and closed above the previous day high. So we're looking for a bullish continuation based on this daily chart higher with a clear premium buy side liquidity objective in the market. Now that we have that narrative on the daily chart, let's hop down another time frame to our 4-hour chart and try and paint more of a picture of what price is doing. So as we can see, right, in this week so far, I'm gonna hide my sessions quickly. As we can see in this week, what we have formed, right, is a low on Monday, right here, and then expansion through Tuesday, Wednesday, and now Thursday. Now, importantly, I'm going to draw your eye to some other annotated levels I have here already. Specifically, this SMT divergence we saw with the YM on Monday. So that means that on Tuesday, the YM came in below and swept out Monday's low, whereas the NASDAQ and the ES actually put in a swing failure and a higher low. Once we broke above this, I'm going to be using this standard deviation along with its terminus projection as a lower time frame draw on liquidity, in addition to, of course, my buy side liquidity and my range high. Okay, so as you can see on this 4-hour chart, using that standard deviation projection, I have the consequent encroachment or midpoint of this 4-hour fair value gap that lines up quite nicely with the terminus of this standard deviation projection with the context of this classic buy week, wherein the week opens, forms a low, expands, and then will eventually form a high and cap the weekly range. Now, inside of this high, we have an SMT protected low in here on this hourly chart, which then started this expansion higher. So I've only been looking for longs this week. So now let's zoom in a bit further and look at how the day played out and how I was able to approach trading alongside the volatility driver of news and how I was able to position myself with good risk such that I expected expansion and was able to have, a stop loss that was appropriate given the volatility of the folder. So let's take a look at what happened in the overnight session. As you can see, I teach 3 types of daily profiles, right? These 3 daily or protraction profiles are as follows, right? We have our classic protraction, our delayed protraction, and we have our void case, right? Or a Judas swing. In this case, you can see that as price declines into the New York session, right? Essentially forming this daily wick, we form an SMT again with the NASDAQ at these hourly swing points, so the swing low. Now, this is important because when we're considering the idea of protraction or daily profiling, we're trying to answer the question, has the low of the day been formed? I.e., will price return or not return to this wick that has been formed? Now, with the proper context, meaning bullish bias obviously in our narrative, we can say that this protraction lower or manipulation lower, which forms SMT at these Asian lows, is a protected low if we can get structure higher that supports price not trading below here. So as you can see, at around 7 a.m., price comes in and creates a lower low on the S&P, and then NASDAQ, obviously, if we refer to that chart, creates a higher low, right, in here. Here's the SMT divergence. And in seeing this SMT divergence and observing this SMT divergence, we now qualify market structure on our intermediate, our hourly time frame, for example, to classify if this is going to remain the low of the day. As you can see, we have relative smooth edges at the buy side, and then we have a change in the state of delivery by the time the New York session opens at around 8 a.m. Now, how do I position myself with this thesis that price is going to expand higher now, having already manipulated, right? Well, now we look for entry patterns, order blocks, whatever entry pattern that best fits your, taste, once we've established the narrative that this should be the low of the day. So importantly, I want to bring your attention now on this 15-minute chart to this double purge that occurs right before the news folder. So as you can see, we have relative smooth edges as a draw on liquidity for the S&P, in which it takes these highs, then refers back in to this 15-minute and hourly change in state of delivery, as well as this M15 internal range, or BISI, right before eventually expanding with the news higher. So how do I position myself in this type of environment? Well, what I recognize is that once we have this change in state of delivery, any time frame like that I align myself with on the minutes charts should be in support of higher prices, right? So I'm waiting for a retracement to align myself with this hourly context. And I want to enter before the news. I want to target my premium levels of liquidity, this consequent encroachment, this range high, expecting news to no longer manipulate, but instead to distribute. And this becomes our series of if-then statements, okay? So if we manipulate before, I can't spell, 8:30, which is going to be our high impact news driver, we will expand at 8:30, meaning we want to position ourselves before that folder drops to capitalize on the expansion or the volatility injection of the news folder. If price does not manipulate before 8:30, we expect or anticipate news to form the wick. Essentially, we expect news to form the manipulation of that day. So as you can see, we've already qualified, right, this area here as a type 2 delayed protraction, meaning we would not want to see news manipulate below here once we had this change in the state of delivery or the activation of this order block on the hourly. So instead, as price draws back in to this array, change in state of delivery and this internal range of liquidity on the 50-minute chart, we want to position ourselves in here, right? And we want to be targeting, our first target objective is going to be that premium higher time frame draw liquidity. Obviously, we have our daily range highs and buy side extreme liquidity up here. However, I simply traded to this high in the morning, as you guys saw in my executions. So where do I put my stop loss? My stop loss needs to be at the point of true invalidation of the thesis. And as you can see, and you probably anticipate, that's going to be this SMT protected low, this daily wick that we are assuming should not be invalidated. So where did I take my entry? As you can see, price eventually came into this change in state of delivery. However, I entered at 7:45 when the NASDAQ tapped this internal range of liquidity. On the 50-minute chart, you'll be able to see that NASDAQ comes into this fair value gap, right, at 7:45, whereas the ES diverges once again bullishly, creating a PD array divergence. I take my entry as soon as NASDAQ taps the gap. I risk the rejection block low or the wick low. It's your preference. In my case, I risk the wick low, and I am targeting this right here, okay? Realistically, you can also risk this rejection block low, but I choose to just risk the true protected low in my opinion, which is the SMT protected low. As you can see, in aligning yourself with the higher time frame narrative before the news folder and understanding your if-then statements, you are actually able to capitalize on that volatility injection wherein news simply delivers price to those higher time frame draws, right? It acts as that volatility injection to quickly and energetically spool price to a location on the chart that you've anticipated. So I hope that answers your questions, guys. If you have any questions, drop them below in the comments. I do my daily analysis and I break down my trades every day in my Discord, but if you're not in there, Twitter and YouTube are also great free resources, and I try and answer as many comments as possible. So let me know if this made sense. specifically about the time frame alignments, I'm going to post some charts as well alongside of this video. So there's some, charts that you can refer to during the video. And yeah, I look forward to doing this more often. I got a lot of feedback to start maybe making some more daily breakdowns. So let me know in your response if you find these helpful or what else you want to see. All right, have a good one, guys. I'll talk to you soon. Bye.